Continuing to rise under $30,000 per Bitcoin, do we now have the strongest evidence yet that the Moon Boys are about to blast through the bone zone? And disturbing news happening right now that will send shivers down your spine and a puddle down your legs. This is absolutely insane. So strap on, buckle in, strap in, and buckle up because you do not want to miss what's at the end of this video. Right now, Bitcoin sits firmly still around the $28,000 level that we have spent much of the last 3 weeks completely tethered to. But now with massive changes happening literally over the weekend and over the world, this absolutely is going to impact Bitcoin. So I want to start off before we jump into the Bitcoin charts about this, right? The Fed, as I've been saying, the Fed was like 8 months too late to tackle inflation. Well, the Fed is now arguing that we have a very strong labor market and economy and banks are not at risk, anything like that, right? It is exactly the opposite of late 2021 when they should have started raising rates. Instead of doing so, they thought inflation was transitory. Do you remember that? It was a very big talking point and it was very arrogant. And we're seeing the exact same thing now, except the opposite. And this is something I've been saying for weeks and weeks. The Fed was late raising rates. Is it possible the Fed will be late cutting rates or pausing? So over this week, we will see jobless claims towards the end of the week and a jobs report. And actually, the U.S. markets will be closed on Friday. So we have about a 4-day trading week here. But some of the big news coming out is that Russia and India abandoned Europe-dominated oil price and agree to use Dubai oil price benchmark. And a lot of talk around oil, right? We've seen crude oil spike a little bit. The largest oil producer in Russia and India's top refiner have agreed to adopt the Asia-focused Dubai oil price benchmark. They've abandoned the Europe-dominated Brent benchmark, and the signals are changing here. With Citigroup saying that OPEC cut shows market is actually much weaker than many believe it is. OPEC's actions are clearly focused on shoring up a market that was looking increasingly weak, with faster than usual stock builds through the first quarter of 2023 and a slower than expected China reopening, oil demand west of the Suez, and way weaker than many pundits and agencies forecast at a time when U.S. gross exports of total oil hit record levels, and with Goldman suggesting the SPR, the Strategic Petroleum Reserve, was partially because the White House was not buying to refill the SPR, so potentially another fault of the administration here. But surging oil prices is bad news for tech stocks, which also, how will it affect Bitcoin? As Bitcoin has kind of diverged a little bit from tech stocks, as we'll look at in a second here, but it highlights that the inflation problem will only get worse. The trending of lower year-over-year CPI numbers is over. Future increases will be trending higher from here. That limits the Fed's ability to cut rates, even as quantitative easing accelerates. So if that is true, that's and you hear people everywhere saying we've been between a rock and a hard place, or the Fed is, in terms of should they cut or continue raising rates. Well, that makes this situation so much more tricky, and that's why people are talking about this. Because this potentially, if this is true, limits the Fed's ability to cut rates. And if that's true that the Fed has a limited ability to cut rates, that leaves us at a situation, or in a situation where banks are going to have continued stress levels being tested, higher stress levels that will essentially only lead to one thing, which would be more and more banks potentially having crisis. And right now, even as the Saudis are finally calling out the Biden admin completely and fully BSing about refilling the SPR, which we just stated was one of the reasons that they decided to cut oil production, look, this small little cut here, look how the market is already responding to this. OPEC knows they have pricing power again, and the potential for an oil bull market is likely here. And again, that puts a lot of pressure on the U.S. But interestingly as well, I think we do need to watch out for this week. Over the past 2 to 3 weeks, we've seen the SEC, even the CFTC, come after crypto heavy, and expect potentially more of that this week. Maybe even some more, aggressive tactics. Contradicting that is that data and Fed commentary over the past week suggest officials remain on course to pull the interest rate trigger again. Basically, one more 25 basis point hike. That's something that's kind of been expected for a little bit. But, if that does stay the same, if banks are able to remain okay for the next couple of weeks, and if this new news of, oil prices rising, puts extra pressure on the Fed, basically, is this final 25 basis point hike, if they do it, going to crush break things even more. Basically, the way that I'm looking at this market right now is that picture a, maybe 50 strands of uncooked spaghetti, and you're just holding it like this, right? And you start to snap it a little bit, and you see a couple of those strands start to snap. And every time the Fed raises those rates, you're squeezing a little harder on that spaghetti, those spaghetti noodles, and they start to snap. Well, what happened a couple of weeks ago was that about, many more of those spaghetti noodles started snapping than people were expecting. And then we just got another 25 basis point hike. Will we get another one? Which if we do, we gotta see how much we're ready to snap this spaghetti. And the big thing is too that when they raise the rates, it takes time for the effects to be felt in the market. Estimated up to a year is how long it takes. So these are not immediate effects, and you're playing a very dangerous game, or the Fed is playing a very dangerous game here. And with that being said as well, more bad news for the U.S. seemingly is the Chinese yuan replaces the U.S. dollar, becoming the most traded currency in Russia. But right here is a chart investors should watch. It's the Fed's balance sheet. It has declined almost $30 billion in just the last week, but we saw what happened a couple weeks ago where it shot up well over $100 billion. I think it was $200 or $300 billion. But here we have Bitcoin decoupling from the S&P 500, NASDAQ, and Dow Jones in the first quarter of this year. The first quarter of 2023 is over, and we've seen that Bitcoin really did do something unique. Now, if tech stocks start getting hit, as we talked about with inflation, will Bitcoin be able to continue pumping? Well, we already have seen some sort of decoupling in some sense, so there is a possibility there, especially if banks continue not doing well. Bitcoin is a very strong narrative. BlackRock comes out even saying, forget about rate cuts this year. So again, how long can everything remain not broken with this very high, not only inflation, but very high interest rate environment? Around 5 to 6%. How long can things... Remember, this is the fastest the Fed has ever hiked rates. The fastest in the shortest amount of time. It's new. This has not really happened ever before. And as well, when the Fed has stepped in to calm the bond market, risk assets have bottomed shortly after. This has led to price run-ups for Bitcoin and the NASDAQ. So are we about to see another price run-up here? It's very interesting to watch. Currently, the stock market is up a little bit today. Again, continuing, we bounced off this trend line, looking pretty good. Bitcoin's still within a wider context breakout, very likely here. And currently, we sit literally in the middle of the bone zone. And you can see where we're being held down by this resistance. It's pretty straightforward. Right here, that $29,000 level, and 30 is going to be a big one as well. Again, the DXY showing a lot of weakness. Altcoins positioned nicely. This is one of those moments where, things could happen really fast in terms of a breakout. We're kind of right now sitting right above the 21-day moving average. We're also above the 50 and 200-day moving averages. The possibility for a further pump here is very possible. But again, as I've been saying for the last 2 weeks, if we did get a rejection off 30 or right around there and go down and revisit 25 and even slightly below that, that is not a bad thing. It's not unhealthy, and it's to be expected. So we really need to wait. I'm personally anticipating a lot of news to come out this week. Not necessarily great news for the markets, but it might be for Bitcoin. Because again, the banking crisis, the news of banks collapsing was not really good news, but it did end up helping Bitcoin. And I'm currently up roughly still about 20,000 USD in profit trading this move. I'm waiting for a very nice big swing here. Keeping these open, for a pretty long amount of time. But if you're interested, take advantage of all the bonuses below, over 50,000 deposit bonuses, sign-up bonuses as well, and 0 trading fees when you sign up using my link below for spot trading. So if you sign up with my link below, you get 0 fees for trading spot. Without any further ado, it's me.